Okay, then let's focus on Justdial then. That's the stock on focus on the back of the company announcing its numbers as well as they announced a buyback. We're now joined by Mr. Money, the MD and CEO of Justdial, who joins us. Hi, Mr. Money. Thanks so much, sir, for joining in. Before we talk about your numbers, I want to understand why do a buyback and just not do a liberal dividend? Since these buybacks are market related and in fact not a tender buyback.
Okay, you look at it this way. The end of the day, the goal is to optimize shareholder value. And if you see it, the dividend way versus the buyback way is far better considering the price at which the stock is right now. So in terms of a long-term return on investment, it'll be far more better going for a buyback than dividend.
Fair point, sir. But, if you take a look at the size of your buyback, 84 crores, that compares to your market cap just to the tune of 3 to 4%.
Yeah, but if you go by, the number of shares get reduced, so your holding gets better on the company, and it will finally reflect on your share price. And that's, again, is going to be a big plus for the investors. We have considered, and also nowadays dividend is not that tax efficient. It is, so we thought like a buyback is a far superior option.
Okay, Mr. Money, then let's come on to your financials. Revenue growth has been good at around what, 7.5% odd. When can that revenue growth go to the double-digit mark?
That's right. So first you have to look at from a point of traffic growth. We have had an exponential traffic growth of 32 to 33% in this quarter, thanks to our new advertising, which has worked very well for the company. That 33% growth will finally translate into revenue. As you know, if you as a search engine grow at 30 to 33%, if you are able to manage this for the quarters to come, it will be an excellent step for excellent future for us. Second is you look at the app downloads. They are up by 250%. So if these are like the engines which draw the company. So basically the revenue monetization follows. Now this quarter, if you see it properly, it is not actually 7.7% growth. It is actually 11.7% growth. Because last quarter had omni revenue. On a like-to-like basis, if you look at it, it is 11.7% growth, despite the fact the small and medium businesses are the worst affected lot due to demonetization. I feel that the company has done very well. It's been a big turnaround, both in the case of traffic and, if you look at monetization. And above all, despite, spending close to about, I think we spent about 15 crores on advertising alone on television commercials, or almost about 20 crores on television commercials. Despite that, our EBITDA has actually, grown. And those are the pluses if you look at it, on a year-on-year basis, quarter-on-quarter basis. We have run a very efficient company, and it's in the right path now.
Okay, company on the right path, Mr. Money. Revenue and traffic has been fine. When can we see the EBITDA margins above that 20% mark?
See, it is more like, if I put it this way, if you look at it, there is a 4% ESOP cost hidden in this result. So ESOP is a non-cash expense, actually speaking. We didn't want to highlight it that way, but if you remove that ESOP, then the EBITDA is higher by 4%. So basically on a cash basis, we are doing much, much better. On a net profit basis, if you look at it year on year, we have grown 50%. So it is like the companies, that Justdial has been a very frugal, profit-focused, at the same time growth-focused company. But in the last few quarters, we did get affected by demonetization. Some of those internal things were there. Those are all been addressed now. And we've got a new CFO, a young, dynamic CFO called Abhishek Bansal. Here on next quarter onwards, he will be giving you the media interviews. And you'll be meeting him also. And we are like full of energy now, looking forward.
All right, Mr. Money, this is a very, very important question. People talk about synergies between Google and Justdial. Are you open to selling the company to Google?
I can't say things like that. Everything is a board decision, and it will be at the right, time and place and price and all those things. But that's not really our. See, we are not obsessed with any of those things. Since you asked a question that how do you see, both partnering together and doing it? Yes, there is a huge opportunity there. And the opportunity is, like I said, 90% of advertisers don't advertise on Google. And there are a lot of things that we do that Google is not doing it. So there can be a huge collaboration there. But there are two separate companies and two different philosophies, I guess. So I don't know.
Okay, we'll take your point that there are synergies between you and Google. As of now, you refuse to comment on whether there could be or you would be open to selling the company to Google or not, but you do not rule out future collaborations. That's something we'll keep an eye out on. Perhaps the street is also taking note of that. The stock up 4% as we speak. Moving back to the buyback, sir, the cash on the company's books post buyback will still be 1,000 crores after doing this very small buyback. We always thought that inorganic opportunities would be better growth avenues to use cash. What's your view on that?
You're right, but then tell me one successful inorganic opportunity in the recent past which has been successful. Inorganic opportunities have to be real. You just don't do things because you have money. And we know how to get the bang for the buck. We're very good at it. And as you know, that our IPO was 100% secondary offer. We didn't raise money from the public. And our reserves have grown 3x since then. I think Justdial is an exceptional company. It's a very different company. And the way we run the business is very different. And so time will tell you that whether our strategy of preserving cash was smart enough or not. So we are on the lookout for better utilization of cash, but we don't want to just squander it over some silly acquisition which does not pay off for the company.
Okay, Mr. Mani, then could we hear any inorganic opportunity from you very soon?
I have been always on the lookout, but there's none right now. So there is none as such, which is worthwhile to even consider.
All right, no inorganic opportunity to consider right now. Thanks a lot, Mr. Mani, for joining in and giving us all those details. That was the management of Justdial. The three key points being, first up, that the revenue growth is actually 12% and not 7% if you compare it on an L2L basis. The margins are better because looking lower than they are because of the ESOPs. And finally, there is opportunity for the company to collaborate with Google going ahead. That is something that the street is liking. The stock at the high point of the day. With that, we wrap up on Chartbusters. Stay tuned to CNBC TV 18. Trading Hour comes up next.